there's two good times to buy Bitcoin. One is 11 years ago when Davinci told you to. The other one is today.
The funny thing is, I had a video, it was in March of 2011. I said, I don't want to tell you, say, I told you so in the future. That's not gonna help.
There it is. I told you so. I love that. You once said, quote, you can actually change your life and build generational wealth in one crypto cycle.
I often tell this story about my ex-girlfriend. I bought her some Bitcoins in 2016, like 8 years later. She's calling me up.
If you remember those Bitcoins, do you have the password to them? Because I lost it.
I'm like, bitch, you're a millionaire. The likelihood of something going wrong with Bitcoin is the same odds of an asteroid wiping us out. So don't bet on the asteroid and don't bet on Bitcoin failing. That's why you want to bet on it succeeding.
You said once that you should have a goal beyond your lifetime. You said that that's really important. What did you mean by that?
If you have a goal that's beyond the reach and you have to plan further out, beyond your lifetime, you have to foresee a whole bunch of other variables that other people can't foresee. You're always thinking about that idea, that solution, that when you're dead is going to function. You will make yourself the best version of yourself. Because that's the only thing you get to take with you, hopefully, when you die, is the version of yourself that you pushed yourself to be.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Davinci Jeremie, the software developer, entrepreneur, and crypto pioneer. You are considered a super OG in the blockchain space, as well as one of the leading voices in the industry, having purchased your first Bitcoin all the way back in 2011. You famously published a video on YouTube in 2013, urging everyone to purchase even $1 worth of Bitcoin for their financial future. You have said that our current financial system is nothing short of a massive deception that affects every individual on the planet, while Bitcoin offers true freedom from the slavery of the central banks. You believe that the upcoming April halving, coupled with a huge institutional demand, will bring about a massive bull market. Davinci, welcome to London Real in Dubai.
Thanks for having me.
Great to have you here. I want to jump into it. You once said, quote, you can actually change your life and build generational wealth in one crypto cycle if you play your cards right. I want to jump into that, but I want to give people a little tease on that. Look, the big news of the day is that the Bitcoin ETF was approved, I think, less than 12 hours ago. This is something everyone has anticipated, and I wanted to get your thoughts on it because 13 years after you bought your first Bitcoin, now potentially massive amounts of institutional money is going to pour into this asset or not. We'll actually get into that. But we're talking about tens, hundreds of billions, some talking trillions, and even tens of trillions of dollars potentially being poured into something that tracks Bitcoin. You know, I don't get to talk to many people that have been doing this for 13 years. What is Davinci's read on this big announcement?
Well, I was quite surprised that they were going to allow this ETF at this point in time, because this allows institutional players actually to buy Bitcoin. And I just figured that they'd wait until the end of the cycle. But it looks like the institutional players had a lot of force and said, no, we want it now. So this is why it exists. Of course, I'm wondering how much Bitcoin will be in these ETFs. There's 11 ETFs that have been approved. And I would like to keep a track of how much they actually have and on the phantom ETF that they sell. For example, it's called naked short selling. That's what it's called. If you were to short sell a stock without borrowing the stock first, that's called naked short selling, to basically buy it back later to pay back. But with an ETF, that means there's more shares out there than there really have in Bitcoin. So that also counts as some Bitcoin that exists, but it's phantom Bitcoin. So it'll be interesting to see how many is going to exist right after this ETF comes out.
Look, it's really interesting, and I'd love to dive in a little bit more. So at 22 years of age, I moved from Boston to New York City, and I started as a derivatives trader on Wall Street in 1993. So I learned about derivatives. And at the end of the day, an ETF is a derivative. It doesn't actually exist. It's derived from the price of something else, and you know, because you're an old school silver and gold guy, and we'll get into that. But you know, there's famous short squeezes in silver over the years where literally someone would corner the physical commodity and they could squeeze the future. And there's something very similar maybe could happen here. And there's a bunch of unknowns that I think people don't really understand about this. They just think, oh, Bitcoin ETF, same thing, trillions coming in, rock and roll. But it's not that simple. And of course, custody of Bitcoin on balance sheets is not a given, whereas people could maybe hold commodities on balance sheets. So it opens up more questions than it answers to a certain extent, right? And the market is kind of came off a little bit as Ethereum pumped, and we can get into that. But no one really knows what's going to happen next.
That's true. Always remember that there will always be pundits saying, including myself, saying that what they believe that's going to happen, but we don't know. The future is unset. An asteroid could hit the planet, and we'd be all. All this is moot. But yes.
Yeah, that's well said. People on Wall Street get paid a lot of money to convince you that they know what's going to happen next, but nobody can predict the future, and so never believe that because nobody really knows.
Exactly.
This thing came in, it was interesting. So I worked as a banker for 15 years. I'm now paying for my sins by putting out content and trying to be more inspirational. But one thing I learned as a banker that people maybe don't understand is that bankers care about one thing. They actually don't care about preserving their rackets. They don't really care about holding the financial system in the fiat prison. They care about their bonus that's coming at the end of the year. And if you're a client and you want something, from a commodity future to Bitcoin to crack, they're going to get it for you. Because if JP Morgan doesn't offer it, the guy down the street at Goldman's going to offer it. The guy down the street at Deutsche is going to offer it. And so this, I think, was a reaction to a huge demand. And at the end of the day, even Gary Gensler couldn't stand in the middle of that because so much money was wanting in. And I think that's why they just capitulated.
Exactly.
I met a guy in Dubai that said he saw Larry Fink of BlackRock at some conference 6 months ago, and he said, yeah, Larry, but what about Gary? And he said, don't worry about Gary. This is happening. And that's interesting, right? Because, who funds these campaigns? Who appoints the SEC chair? There's lots of things that we don't know. So you're not necessarily bullish on this event. You don't think this is necessarily going to be good for Bitcoin?
And for this cycle, yes, of course. It's going to help this cycle. Bitcoin actually do extremely well in this cycle.
Okay.
I'm just surprised that it happened, but hey, it happened, and I think they will have Bitcoin in this ETF. They can't get away with no Bitcoin in this ETF. There's just no way. But they will have some, and certain players, just like with gold, the gold ETF, you can actually withdraw direct Bitcoin with it. But for the average person, they will not be able to. And that's fine. That's the market. That's how we are. Right? Certain people get certain privileges and others don't, right? Certain people get bailouts, others don't. So that's the way this is the way we've designed our markets. And I really see that this is going to actually help the Bitcoin price go higher than my lowball number, which is $160,000.
Was without ETF approval.
Exactly.
Okay, good. And let's jump into this. So your call was about 160,000 in this bull market. Rough time where you think that might happen?
In 2025.
25, okay. Mid, early, late?
Yeah, late. Maybe mid to late. So
Okay.
So September would be probably September, October, November would be the time frame where this would end.
So my mom is 75 years old. She lives in San Diego. And based on yesterday's actions, I think some of her pension fund might be going into Bitcoin. So what would you tell her if she said, Davinci, what's the halving? What would you say? Because here's the news, we're gonna have to start educating a bunch of baby boomers. And so what's the simplest way to explain that to them?
Well, the halving, if you just ignore what the halving, it's just you're like, what the halving? What does that mean? Well, Bitcoin works like gold, right? And gold gets mined into existence. Well, Bitcoin gets mined into existence. And the amount of Bitcoin that gets mined into existence gets reduced by half every 4 years until there's nothing. And that's what the halving basically is.
Right, okay. And the supply of gold kind of goes up like 1% a year or something like that from mining?
The mining stays steady at 2%.
Okay.
If we have a huge price jump, then it might increase beyond 2%, but it generally stays at 2%.
Okay. And then, so for Mom, this is for you. For Bitcoin, I think there's currently been about 19.5 million Bitcoin mined, a total that's going to happen of 21 million. And that supply, every 4 years, that supply is being dropped by half into where it just tails out in like 21 something, right? And
yes, 2140 is when it's zero. It's
zero.
absolutely zero.
Wow.
And it's only fees that the miners get paid with instead of the reward. It's called a block reward.
Okay.
But they could also get the block reward through the fees of transaction fees, basically.
Okay.
So whenever you people in general start transacting, they can get paid in fees because you can set the fee. You don't have to pay any fee actually. You pay zero fee, but they might not add your transaction to the log, the ledger.
Because it's a market, right? You
exactly.
have to have the highest price to get served.
Exactly.
Now, of that 19.5 million coins out there, the rumor is there's 4 or 4.5 million that are completely lost and will never be recovered. I don't know if that's right, but that leaves 15, maybe going up to 17 left. You've got institutional money coming in, potentially massive institutional money coming in. Why isn't this trading at $1 million yet?
Well, institutions are not stupid, right? They know how to play this game. So don't be surprised if we get a little bit of a pump. Today is the 11th. I believe New York is waking up right now. Yeah. So I wouldn't be surprised if we get an initial pump and then they just short the mofo out of it, basically.
Okay. Right.
And so, as you know, they can do naked short selling against the ETF.
Right. So they can open up and start naked shorting that ETF, drive it down
Exactly.
to start buying it cheaply.
Exactly.
Okay.
So.
Yeah. And do you think these institutions have been amassing positions over the last 12 to 18 months, knowing that this was a possibility?
Yes, I think, I believe, I'm going to guess on this, that they took out Binance because Binance always had the liquidity whenever there was a problem. There were people believed there was a problem with Binance. They had liquidity because they had a 1-to-1 ratio with Bitcoin or crypto that they had. If you deposited one Bitcoin, they had one Bitcoin. If you took out one Bitcoin, they were minus one Bitcoin. It was always 1-to-1 ratio. They never
Cook the books.
Yeah, exactly, or did fractional reserves.
Okay.
So the government probably didn't like that, and they want to take those Bitcoins and move them probably into the ETF. And I wouldn't be surprised if they said, okay, listen, you're going to lease us those Bitcoins, right? And it was done for gold leasing. People don't understand this concept. Leasing, you do know leasing of a car, right? Have you ever leased a car?
I never have, but you basically, you rent the car in like a term, right? So a certain amount of time where you use the car and pay someone else, but you never own it.
Exactly. It's effectively renting. And so what happens is on the books of the car company, they still own the car, even though it's in your possession. Well, gold and silver leasing works the same way. They lease out the gold, right? They can give them the gold, but even though they don't have the gold, it still counts as their possession. And legally, by law, even though, for example, you are owed that gold that they leased out, they don't have to, no business has to pay you directly the gold if there's a default. They only have to pay you in dollars or the local currency. That all debts are owed are payable in the local currency. That's just the way it is. And so when you give custody of your assets to a third party, they never have to technically, if there's some sort of, what is that word, the French word, force majeure. They don't have to pay you the asset, they can pay you the local currency.
Okay, got it. All right, so funny games can be played behind the scenes with these assets. And that's
because of that, yeah.
probably what's happening now.
Exactly, so that's how they can expand the supply of this asset without people noticing it so much.
Okay. I had a guy named Mark Yusko on my show. He runs Morgan Creek Capital, and he's made quite a few investments in blockchain. And you know, he's really an old school TradFi guy who's been investing in the markets for 30 years, and he's not, you know, some weird conspiracy guy. And I've had a few on my show. And he said, Brian, right on the show, I didn't even prompt him. He said, I find the timing of FTX going down to be just too convenient. And I don't believe some 28, 29, and 30-year-old did all that. I just don't believe it. And then again, they finally closed down CZ at this, I mean, literally a week or two before the ETF. The rumor was the ETF wasn't coming out until Binance was down. And like, again, the timing was perfect. So again, I'm not a conspiracy theorist, but these timings seem a little too peculiar, where they took all the people out that really were the pioneers, and now perfect timing for the TradFis to come in for this instrument.
You know, they did that with the silver ETF. Did you know that?
I didn't know that.
Yes.
That's why your experience as a gold and silver guy are helpful. Not to mention the games they used to play with gold. People don't realize in America, it was illegal to own gold in America.
Until 1975, yes.
I mean, that's crazy. So they did the same thing with silver, is what you're saying. They played crazy games with silver back in the day.
Warren Buffett, he purchased a lot of silver at the lowest possible price. I think it was like he got like $2 an ounce or something like that. And he was forced to sell. He said that he sold it too early. He wasn't forced. He didn't say he was forced. He just said he sold it. He was stupid. He said, "Oh, I was just stupid. I sold it at $7." Yeah, right, buddy. The same amount of silver in your Berkshire Hathaway is the same amount of silver in the ETF.
Right.
Okay. Yeah. Tell me another one, okay?
Okay. Right. So there's strange powers out there that get people to do things that don't always make a lot of sense. And some of this is happening right now.
Yeah,
okay.
Exactly.
Let's talk about, you kind of alluded to it, but I think it's a really important point maybe to talk about that people aren't educated on. This ETF is going live today, all right? And so now all of a sudden, we're going to have an ETF that is supposed to be based on Bitcoin, but as you said earlier, they don't necessarily have to hold one-to-one, and these institutions can't hold the Bitcoin on their balance sheet. And so what happens in the future, maybe gold is a reference for this, but there's this concept that the tail can wag the dog. And if there's so much ETF interest that just trades back and forth, that doesn't settle against Bitcoin, and then you have the Bitcoin underlying market, there can be a point where the basis between the two can be very significant, negative or positive, and it can stay that way for a long time. Example, the ETF might price Bitcoin 50% higher than the actual Bitcoin, and you might say, yeah, those markets will arbitrage, but they won't necessarily, because the institution can't buy Bitcoin as an arb.
No.
So I think people are a little ignorant in understanding what this really does to the Bitcoin market, because you could have these two shadow markets where the Bitcoin ETF doesn't look anything like Bitcoin.
Yeah, that's coming, but not in the future. It's coming in the future.
Explain this to people, because you understand this well.
Exactly. So an example of that is the silver price back in 2008 during the financial crisis. Silver plummeted heavily below, I think it went below like $10, but you couldn't buy it at that price. It was just no way, no one was selling it.
Okay.
You couldn't even buy the 1,000-ounce bar at the comics right? For that price.
So there was no bid, there was no buyers.
So, I mean, there was plenty, there was silver to buy.
Right.
It was just nobody was willing to sell it at the price that the commodities exchange, which I call the Crimex.
Okay. The way they were quoting
Because-
the price there, but it
Exactly.
wasn't a real price.
No,
Because
it
nobody
wasn't.
would sell it there.
Exactly.
And so the commodities exchange, known as the Crimex, was like artificially deflating the price.
Exactly,
To have a
because-
print in the Wall Street Journal, for what reason?
Well, here's the thing, right? Silver is heavily manipulated. And that was an example of it, where you couldn't buy silver at that price. You had to buy it at like twice the price.
Wow.
That was marked. And that's coming for Bitcoin.
Okay.
If the US dollar doesn't collapse before that. But if there will be a day where, oh, wait a second, there's no Bitcoin on the regular spot exchanges, but the price is low and I want to buy some. That's coming. And nobody's selling it. Because there's a lot of people like me, and Michael Saylor's one of them, but I'm wondering how long they're going to take him before they take him out. Hopefully he's smart enough. He meets with Elon Musk and learns a few tricks, because I think Elon has the government by the balls somehow, and I don't know how.
Right. He's managed to escape all the lawsuits and things.
Exactly.
Yeah, he's been pretty good so far.
Yeah. So he might want to sit down with him and learn some tricks, because they will be coming for him. There's a lot of Bitcoin, and I don't. You know about the silver short squeeze that silver. It wasn't a short squeeze. It was actually they had purchased a lot of Bitcoin. Silver. Sorry, in the 1980s, the 70s, the Hunt brothers.
Yeah,
Remember
the Hunt brothers. Yeah, they were based in Chicago, maybe. They were big in the silver, and they took a huge position in the physical silver.
Exactly.
And when the futures expired and people had to deliver silver, they couldn't get their hands on it. Is that what happened?
No, what happened was the commodities exchange changed the rules and said that if you have a higher than 5% position, long position, you had to sell. And so they had to close out their positions. Right, and then they were charged for market manipulation. They don't charge you for market manipulation if you short it. All right, you can short as much as you like, but if you go higher than 5% now, ownership of any particular commodity, you are manipulating the market. So that's the rule.
Okay, so we can expect a lot of funny games, nonsense, weirdness that spot Bitcoin never had.
So imagine if Michael Saylor goes to 5%, he's going to be in trouble. So he can't. But that's a lot. That's really high. I don't think he will get to 5%. But if he ever did, that would get him in a lot of hot water. I'm sure he knows that.
Yeah.
Right?
Okay, so I guess the message for everybody is we need to expect the unexpected. And as much as we wanted to be, let's be honest, a lot of the crypto world wanted the world to finally say that you're right. And to a lot of people, that's what this ETF means. It finally means that everyone agreed that you guys have been right. You've been going to your Thanksgiving and Christmas tables and being ridiculed by grandma and grandpa for 10, 15, 13 years, and finally it's there. And that's all well and good, and institutional money's coming in, and now your mom and dad are literally gonna have Bitcoin positions whether they know it or not in their pensions. The downside is that beautiful spot market that you used to enjoy, that, might have been volatile and there might have been whales playing games, at least it was a real spot market, might now be overshadowed by an ETF that makes it do all sorts of weird stuff. And,
Exactly.
Right, and maybe regulations and exchanges and stuff.
I feel that the ETF may be the tail that wags the dog. And we'll see. We don't know for sure. They can't do it with the commodities exchange, which happens. Bitcoin is the only commodity on the commodities exchange where you can't accept delivery.
It's so weird.
It's insane.
Right.
And to really get an understanding, oil went negative, right?
Yeah.
And you could
That's a great example.
Exactly.
Right.
And the difference between the silver, when silver dropped to a low price and oil dropping to the negative price, is that the reason why it did, because you were going to get that oil. If you had that contract, that oil was coming to your house.
Right. Right. 'Cause literally, they couldn't deliver the oil, right? Because it was coming through the pipes, and they were going to start pumping it out into the street. And so they would pay you to take the oil. That's how it hit negative. This is something really important for me to understand, because people are like, well, why would you ever pay someone to take oil. Well, you will if it's coming out of the pipeline. You need someone to do it, and that's a great example of like a futures price in a
because
spot.
you had a contract that was going to deliver oil, and you have no place to put it.
Right. Yeah.
So you got a problem.
Right.
So you're willing to take this problem off my hand. I'll pay you. So that was why it went negative. But that can't happen with silver, gold, or Bitcoin, because nobody will deliver those items to you. I mean, they'll deliver gold and silver if you really pull at them.
Yeah.
But Bitcoin
You can't do it.
is the only commodity that will not be delivered to you.
Okay.
The only one.
Yeah. And again, just to give people a quick overview, like when you're trading a futures contract, say it's a 3-month future or a 1-year future, the whole point is that when it comes to expiration date, then you can, if you don't close out the futures position, get delivery of the commodity. Exactly. And that is there to ensure that there's no funny business around that time with what's the price of that commodity. Because I worked in the interest rate markets for a long time, and I traded Eurodollar futures, and they price against LIBOR, which is the London Interbank Offering Rate. And when I joined Wall Street, it's just like a short-term interest rate. And you thought, well, it's a rate, and you take the average of 12 banks, what could go wrong? Well, about 5 years ago, a bunch of traders in London decided to manipulate that price. These are big institutions that were cheating, and they could do it because there was nothing to deliver. So this isn't just a point in passing in a derivative. If you can't deliver that thing, it means someone's going to manipulate the price of that on delivery date, and they could move that sucker 10%, 20% negative, and you'd be like, what the hell's going on? Go look at the ETF. That's probably what's going on. So this is what's coming, right?
Exactly. I mean, it won't come right away, but it'll take some time to manifest itself. But it's amazing how I think about that commodities exchange, but I understand how they try to rationalize it, because with regular commodities, if you buy some corn and the farmer can't produce the corn, and he defaults, he can't produce it, he can pay out in cash, right? If all else fails, they can pay out in cash when the contract comes and expires. And so their logic is, well, why don't we everything just pay out in cash? But wait a second, the point of any commodities exchange is so that when you have legitimate hedging needs, so for example, a farmer is a legitimate hedge. He's trying to predict, he doesn't want to predict the price of corn. He wants to have a specific amount of money today, and he's going to produce the corn tomorrow so that he knows how much he can spend and so forth, so he can project out into the future. And on the other side, someone wants to consume the corn, they want a fixed price over a certain amount of time as well. So this is why we have the commodities exchange, and this is the benefit of it. It's not something that's just for only speculators. Speculators are just in between. Yeah. They're the ones who are taking the risk, not the consumer and not the producer. Right? So that's what it's for. And so when we have the Bitcoin ETF, it's all 100% speculation, pretty much. I mean, yes, you can use it to hedge. However, that requires a little bit more work and fancy footwork, but you can use it to hedge, but it's not as good of a hedge as if you can receive the asset directly.
Right.
So that's the problem.
Yeah, so we should buckle up to have some weirdness going forward. Okay, all right, appreciate you explaining that. Gary Gensler had a weird day yesterday. I think he started off the day by saying that that wasn't our tweet from the SEC that approved the ETF. I mean, again, the internet wins again, or crypto wins again. Yeah. And then at the end of the day, I believe he said that even though the SEC has approved the Bitcoin ETF, the SEC does not approve Bitcoin. As in, we do not recommend you invest in Bitcoin or crypto, even though we have approved the SEC, which again, looks like Larry Fink just told him what to do, because that's clearly a mixed message. What did you make of Gary's mixed message when all this comes out? What do you make of Gary in general in that role? Just your thoughts.
Well, Gary Gensler is a paid hack. I mean, one time he's for Bitcoin, and then another time he's against it. Right. He's just getting paid.
He taught at MIT a course in 2018. It's on YouTube. I watched the whole thing, 24 hours. And guess what? It's surprisingly good. He's really well versed in it. And at the time, he was saying that, Ethereum's not a security and all this stuff. And then you look at the Gensler now, it's like a different dude. It's a different dude. Now it's political Gary Gensler.
Exactly.
Who's running for office or Treasury Secretary.
That's all it is.
And he's just towing some other party line. It's actually like Jekyll and Hyde, right?
Yeah, I mean, he sees a paycheck either or is getting one or sees one in the future. And so that's all he's working towards and working for. So, and the government gets what the government wants. The government doesn't like Bitcoin. So they are trying to actually hate on Bitcoin, doing their best. They have even what's called a document that leaked. It's called Choke Point 2.0, where they have
Operation
a whole,
Choke Point, right? Yeah.
whole plan of attack on Bitcoin. And so that's why I was surprised this ETF actually came out. Part of the choke point is that they couldn't let this ETF come out so soon. And so, I guess they had too much pressure from people with big money.
Greedy bankers.
Exactly, because they don't care about the financial system. They just care about getting more money.
Exactly. Never underestimate a greedy banker's desire for his bonus. I kid you not. I was one of them. I worked with them. That is the most important thing. Nothing else. Not, like choke point, not what the institutions want. It's them looking at, not a $10 to $15 million bonus, but, a $100 million bonus. Yes. So I guess that pushed it through.
Yeah, that's the beauty of the government is that they never they never go and manipulate things directly. They always organize laws so that they can get a specific outcome.
Okay.
Right.
They use regulation to get the outcome they want.
But sometimes it backfires.
Right. Okay.
And this is one of the times it backfires on.
Okay, that's well said. Now look, before this conversation, you asked me to ask you some hard questions. So I'm going to ask you some things that I've heard. Was Bitcoin created by the CIA? And since you were early mining it, are you in the CIA?
Well, if I was in the CIA.
Come clean on London Real.
First off, I'm Canadian, right? And I was born in Trinidad.
Perfect cover. Right? If you were Russian, it'd be even better. Okay.
So, unlikely. That I work for the CIA. Now, I was there when what was his name? Andreas? No, it wasn't Andreas Antonopoulos. It was somebody else. It was another person who was working closely with Satoshi, and the name has
not Roger Ver. No. Okay, somebody early on.
Yeah, exactly.
I know one of those guys.
He went to the CIA office to explain what Bitcoin was, and everybody was freaking out. I remember back then.
When was that?
It was back in 2011.
Okay.
And that's when Satoshi said, "Okay, no, I'm out."
Okay. All right. So was it created by the CIA?
I don't think so.
Okay.
I think that based on what I learned about the source code, it was created by somebody in the NSA.
Really? And
the evidence of that is the randomizer. What was quite interesting about the randomizer is that a computer has a hard time making up random numbers because it's exact.
From my early programming days, you have like a seed, but it's hard to actually make it
truly random.
Yeah,
right?
Okay.
And so there's lots of code or actual people have come up with some methods that produce a random number, a true random number from a computer. And so there's lots of a certified method that's stated that they don't have any backdoors. They've been checked and rechecked, and they're certified to not have any backdoors. Yet Satoshi didn't use any of them, all the certified methods. He used this obscure method, which wasn't certified. And a lot of developers scratched their head until Snowden, when he released that, the NSA had backdoors to all the certified randomizers. With enough data, they could actually reproduce the random number that you actually chose. So,
Okay. Does that mean they can they can break codes?
Technically, they can break
all the security
Get
stuff.
get in,
Any
get your Bitcoin,
cryptography.
get your Bitcoin, basically. But Satoshi chose the one randomizer. They didn't have a backdoor. How is that possible? Did he get lucky? I don't think so.
Okay. So if he's NSA, he knew their tricks and he decided to build something that they couldn't break.
He was probably just versed as a developer and he knew what they could do. And so he said, okay, well, I'm going to use that one. That's all, right?
Okay.
And because he was tired of watching, the banking system get away with murder and printing money. And, oh, yeah, we're going to do these crazy derivatives and wipe everybody out and wipe ourselves out. Oh, we're too big to fail. Can you give us some money, please, government? And, yeah, everybody gets paid. They all got their bonuses. Yeah, so he was sick of that, and that's how Bitcoin was.
Right, it was born out of the 2008 mortgage crisis crash,
Exactly, yeah.
And he even etched in that Financial Times headline in 08 or 9.
Yes, I did the same. I tried to develop the exact same thing when I realized what was going on, and I was told by everybody, "Oh my God, you're stupid. You can't solve the double spend problem." Because I'm a software developer as well.
So you tried that in 08?
Yeah.
Really?
And it's a funny thing of 08, 2009. And I got discouraged by my peers. And I should have pushed through. Because I probably would have found Bitcoin eventually if I pushed through. And I was a little disappointed with myself.
Now that's the next question. Are you Satoshi Nakamoto?
No. And even if I was...
Konnichiwa, Satoshi.
Even if I was...
Yeah.
I wouldn't tell you. Because I would be dead.
You think he would be dead?
Oh, for sure.
Really?
Oh, for sure.
Who would kill him?
I don't know who, per se, in the specific persons. But here's the thing. If you look throughout history, you've seen most assassins of presidents, right, have been because they tried to stop the banking system, stop the fractional reserve, the central banking. Most assassinations were because of that.
Really?
So if that's the case, you mess with them. And in fact, Kennedy, we were talking about that earlier on.
Yeah.
I think Kennedy was killed because he wrote into law, it's still there on the books, but it was rescinded, Executive Order 111110, that the United States is now switching back to silver as money and using the treasuries, because they had a large holding of silver, as money, and he wanted to print silver notes.
Interesting. I thought he was trying to abolish the military-industrial complex, although they're very closely related, right?
Yeah.
Because that's all the money.
But you could look up that it's on the wiki page.
I'll check it out.
And
some say the fact that Satoshi is this unknown, mythical figure is how Bitcoin remains so robust and strong. Because if we knew who he was, or even if he was a real person, somehow it might make Bitcoin less, legitimate. Is there a truth to that? Because a lot of people have said that, from Andreas Antonopoulos. There is something, having that mystique there somehow makes it cleaner, doesn't it?
Yes, I think so, because a lot of people, they associate Ethereum with Vitalik. Yeah. Now, if Vitalik were to die, Ethereum would plunge, but it's still a solid product. Nothing's changed.
Right.
Yes, the developer has died, but
right.
It's still good. It still works.
Right.
Right. But people associate, because we are human beings. We like to connect with people.
Yeah.
Right. We like to feel that person is got my back. It's taking care of me.
Yeah.
Right. And if he's gone, he's not taking care of me anymore. So why should I hold his assets and stuff like that?
Yeah.
Why should I hold that stock or whatever? So that's why. That's another reason why you. And then, of course, he'll be hero worshipped, right?
Yeah.
People would look to him to answers. Like, people look to me for answers, and sometimes it gets annoying, right? Because the number one question I get the number one question, and everybody asks, and I jokingly say, nobody asks me that, is what's the next cryptocurrency I can buy so I can be a millionaire one day?
Really?
Yes.
And what do you tell people when they ask you that? That's your most asked question?
Yes, and I say, nobody asks me that. Wow, Jesus, this is incredible. And then I say, Bitcoin, right? And yeah, you could buy, but it's too expensive. Yeah, you could buy other cryptocurrencies and they can go up 100x, but you got to be right twice. Once at the bottom and once at the top. And the odds are you're not going to be right twice.
Yeah.
Right? So
just buy Bitcoin.
Buy Bitcoin, wait for it to do its thing, and you won't regret it. Honestly, I often tell this story about my ex-girlfriend, and I bought her some Bitcoin. She spent like $3,000 worth on Bitcoin and a whole bunch of other cryptocurrencies.
What year?
In 2016.
16, okay.
And she forgot about it. I gave her all the passwords when we broke up and so forth, and I knew she would not remember them. And so I kept them, and then like 8 years later, she's calling me up and saying, it was like more than not, it wasn't 8 years, it was like, it was 7 years or something, and she's like, hey, Davinci, remember those Bitcoins? Do you have the password to them? Because I lost it. I'm like, bitch, you're a millionaire.
That's the name of this show. Bitch, you're a millionaire. I love it. Okay. Hey,
she's like,
you knew that before you even opened the accounts up. You just knew.
Exactly.
And was she shocked?
Yeah. She had $1.2 million.
And did she spend it all 3 months later back to where she was?
No, she sent it to another brokerage firm. She sold it all, sent it to a brokerage firm that was obviously a scam, and I told her it was a scam, and she wouldn't listen, and then lost it all.
Funny how that works, huh? Funny how that works. You got to almost kind of earn that money to keep it. All right, and so you tell people just buy Bitcoin, and you told people back in 2013 to buy $1 worth of Bitcoin. That gets confused. You didn't say buy Bitcoin for $1. You said just buy $1 worth of Bitcoin because you knew over time this is an intelligent way to make money, and you're going to spend that dollar on something stupid anyways. So you've always been telling people to get in on this asset, exactly. And nobody listened to you. You even guaranteed people's money at some point, right?
Yeah, that's right. I have a video out there where I guaranteed people's money because I was so confident that this was going to work.
You said, buy $1,000 worth of Bitcoin, and if it goes to zero, I'll give you your money back.
Yeah, exactly.
That's pretty good.
Yeah.
You said like 2 people took you up on it?
5.
5, okay.
And 2 of them gave me 100 Bitcoin thanking me many years later. Yeah.
Okay.
They were like very, very happy.
There you go. So speaking of OG days, I was watching your videos last night. It was crazy. I mean, you are there early on. First of all, it's weird because lightning strike twice. I mean, one thing for you to be involved in Bitcoin, another thing for you to be a YouTuber back then. I mean, I uploaded my first video, I think in 2007 on YouTube. I think I was riding on the back of an elephant in Africa. And then in London Real's first video was 2011. There weren't many people creating back then at all. So not only were you early on Bitcoin, but you were creating crazy stuff. You got pictures of your mines in your home. You even recruited your niece or something, who's a pretty good actress.
Yeah, she was an actress. She's actually done movies.
Really?
Yeah,
I mean, it was pretty good.
Movies, yeah.
And I mean, you cut that in the beginning. I mean, you know, it's not exactly, people don't remember. You couldn't record on iPhones back then. Editing software was hard. Microphones were hard, but you did it. So take me back to those days. Did you ever watch those videos and look at that guy? Who was that guy?
Well, the reason why I didn't want to do these videos, I didn't want to get onto YouTube. What got me onto YouTube was once I read about how our financial system works and how it transfers wealth from the poor and the middle class to the rich through the inflation, and that it was not sustainable, and it always ends in massive disaster, meaning that the middle class gets wiped out, and then we have despotism and so forth because the top 1%, which currently is not nice people, right? Whether you believe that it's a conspiracy, it doesn't matter. They're not nice people because our system is a means of theft, legalized means of theft. And so do you think people who know how to steal are good people at the top? No, they're not. So
how did you know this? Because people forget there weren't YouTube videos back then. There weren't podcasts back then. So to learn this is very hard to do. You got to find books, you got to find groups.
Right.
Like, people don't know, I'm talking like an old guy. You don't remember what it was like, but it was hard. So how does a guy like you, especially in the software or engineering field, learn about money in such a way that you're convinced and see what now most crypto people know is true? Inflation, like printing money steals from the poor. How did you know that?
Well, I first off, I heard what got me interested in this and realizing that I didn't understand money was a presidential debate. Ron Paul was, I don't know why I was watching a Republican debate, because back then I was a socialist.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.